Hey everyone, hope you're having a good weekend. It's JJ. We're back doing the weekly update videos, and I think this one's a good one to have after that liquidation that we've had. Want to bring your attention. Let's get right into it. Um, so first of all, you guys know that seasonality, where the market gets marked up at the end of the year, that's tied to compensation. Okay, so now hedge funds have shown their investors that they're smart. They're going to get more money. Um, you know, Traders and analysts and everyone, their bonus time is reflected now. That's all done. So now the market sells off as it loses its bid. Okay. You also have macroeconomic stuff going on. And of course, but generally, when the market sells off after a brand new year, people are trying to get their inventory going again. They need to restock the shelves. So that area is a big chunk of volume down here under 58.68 quarter. And as you can see, we came just into that level on Friday into the close. So there's a position here. And here's a few levels for you to look at. This is just a clean candle chart with volume profile. I've got balance zones and then double balance zone. We're still in good shape up here. No really big change until we take out 5,800 and come, into this 5780 area. So that's what it's like on the candles. Let's go take a look at the market profile. You'll see the same thing. You'll see this area of trading volume where the market has come into now. Big level to the downside for the trading for the TPO levels is 58.25. That's the bottom of the zone. Last time we had a liquidation, we did a look below and fail. Straight up, that's of course, election. So we're back down to that pre-election position, that balance. So I would say over the week ahead, look for 58.25 to get taken out. If it doesn't, we'll probably bop around here between 58.25 and I'd say 59.15. And remember all the inventory now. Remember, folks, don't forget about inventory. Yeah. This market is all about taking inventory, marking it up, and selling it. And all of this inventory is long. So anyone who's long above 59.15 is trapped. They don't all sell at the same time. Be on the lookout for that. Okay. That's what we're looking at on a longer time frame. There might be balance here, or we might get some decent liquidation and break 58.25 and come back into these levels. And if we do so, I'll update the video. Okay. For Sunday night, our close is 58.61. So what generally happens? Here's the position. It's just under 58.66. What happens when a market sells off on a Friday? Sunday, they like to take what they took in, right? Because wholesalers had to buy in this area. They'd like to take it and sell it up here, right? So look for that. If that does not happen, it tells us that sellers are still competing. There is no buying, and we'll be looking for a break of 58.58. And then, of course, the previous day or Friday's low down here. That would be something you definitely want to look for. It's 45 and a quarter down here. If we break 45 and a quarter, then we're looking at 58.37 and then 58.25. Okay. So those are the levels on the downside. Upside, we'll use the upper stops, the positions here. That's where the majority of the inventory is priced. Okay. I'm going to show you what I did with the candles. I drew a balance zone from 58.60 on the close to 67, double it to 81. So here's that position I was talking about, right? The wholesale market makers would love to take this because they had to buy it on the way down, right? It's a two-way business. You got to take an inventory. If they can't get it above this red line, this is about 58.72. That's where the sellers were competing for hours, right? The tops of the candles are where the sellers compete and push price down. They need to capture the buying. So there's our cost basis. If we can get above 67, you're looking for around 71, 72. And then, of course, if we break to the downside, you double the cost basis to the downside. And that's because just like in a store, you put it on sale, right? If you can't sell it at cost. Sometimes you got to sell it under cost and take a loss. So your bottom would be 58.46, which is, oh, what a coincidence, just right down there at the previous day low. Okay. So that's what we're looking for. Remember, you know, be be a bit smart, folks. It's a brand new year. Let things develop. We have all sorts of economic news coming at us. Just take it slow, and you know, if you have questions, reach out. We're around. Come visit us at microefutures.com. Got a 7-day free trial. Some knucklehead, we posted a video and he said, well, JJ doesn't show his trades or trading. Come into the room. We'll trade with you. I'll trade right alongside with you. You got a 7-day free trial. Come and check us out. You got nothing to lose. I promise you, you will learn more in 7 days than 7 years in other rooms. Come learn from someone who's actually created charts and sold millions and millions of shares, created markets, and taken companies public. We know what we're doing. It's a simple business. We teach you how to navigate the waters and make money without losing a lot of money. We keep things simple so regular people can make a buck in this crazy business. Stay safe out there. And shout out to all my brothers and sisters in Los Angeles. I hope everyone's safe. You guys take care, and we will see you during the week. Thanks for watching. Bye for now.